Hello, everyone. Welcome to the How to Ensure Your PPP Loan is a Grant webinar. This is a re-recording. We actually had the live event last week. However, by popular demand, I wanted to record this just to make sure that if you missed us on our event, our live event last week, that you do still have access to this important information. So we're going to go ahead and get started. First, I want to introduce myself. My name is Taliba Bales. I am the founder and CEO of TNB Tax and Financial Services. And I want you to consider me your trusted business advisor. I have over 15 years of civil service with the federal government, as well as small business community development. And my passion truly is closing the gap that I believe exists within the small business community when it comes to access, access to information, access to capital. And so I am personally committed to empowering CEOs in closing that gap, specifically through financial tools. My company does bookkeeping and payroll. We also, of course, do tax compliance for individuals as well as for businesses. We talk about business credit and business financing, tax planning. And so I entered the scene of our current environment and assisting clients with applying for SBA disaster loans and the PPP loans out of a demand of my clients. And just so in the conversations that I have been having, I wanted to just expand the reach of some very important information. So as we know, one of the main benefits of the PPP loan program is that after 8 weeks, you would be able to request a forgiveness of the loan and the interest that you would have been approved for. And any amount that is over the forgivable amount, or if in the event a portion is not forgivable, I should say, in essence, that turns into a low interest SBA loan, okay? One of the things that I mentioned during the live that I would like to interject here as well before we get too deep in the presentation is that this particular webinar is not only for business owners who have already been approved for the PPP. We're also going to be covering details that are helpful for those of you who are currently applying for the PPP right now or are interested in applying. I fully understand there's, so many emails you're probably getting, so many Facebook posts, so many social media posts, and you just want to know the nuts and bolts. Well, this webinar does give you the nuts and bolts, even if you're interested. So I tried to tailor the information we're going to be going over for all groups, okay? All right, so let's get back on track. So our workshop goals, we're going to take about 45 minutes max of your time. But it is to do just the title of the workshop, and that is to ensure that for those of you interested in the PPP, for those of you who have already been approved for the PPP, that you truly do get the benefit of getting that loan forgiveness. And I'll use the word grant and forgivable interchangeably when it comes to what we're going to talk about. And so where did I get this information? How are we going to accomplish this goal? Through the objectives that you see here. So we're going to describe our understanding of the PPP loan forgiveness process. And that is going to be based on the actual CARES Act. Yes, there are people who actually read that. The SBA's PPP interim final rule, as well as the supplement. And then on April the 20th, last Monday, there was also the SBA published in the Federal Register a little more guidance as it relates to the PPP loan as well. And so the information that we're covering on today, which is the 28th, is based upon the information we have compiled. I do want to give the disclosure. You may have caught me saying today's date, which was extremely important for me to do because, you know, we all know that there is the intent for this process to be a smooth process. We know this is the second round. We know during the first round, there were a whole bunch of changes. And so I have to put the information disclaimer out there, you know, that what we're going over is the information that is factual and relevant as of April the 28th, because things could change. And that's just the nature of this rollout program. So I do want to make sure that you get this disclosure and this disclaimer. The most important thing, which I will be saying throughout the webinar, is particularly for those of you who are approved for your PPP loan, you want to make sure that you do go directly back to your approved lender for any specific relates to your loan, okay? Because those are going to be the people you go to request the forgiveness. So you want to make sure that, you know, for example, if it's America's First Federal Credit Union, if it's Regions, if it's Renaissance, you want to go back to those banks and make sure that the things that you are doing in documenting your PPP loan are going to be acceptable when you do request that forgiveness, okay? All right, so generally speaking, let's talk about the PPP part. Again, just to make sure that we're all on the same page. So for the PPP, the letter of the law and all the applications are based upon what is considered your payroll, or your monthly average payroll, and that is then multiplied by 2.5 to determine what your eligible amount is. For self-employed, that's what's going to be the number at the bottom of your Schedule C. So if you normally file a Schedule C and you write off everything, then your number is negative and you'll very much will not get approved. You have to leave something there on your Schedule Cs, and I talk about that in other webinars for my self-employed folks, but I do want to make that distinction. So the PPP is calculated if you are running payroll on your monthly payroll costs. If you're self-employed, it's calculated on the number that is remaining at the bottom of your Schedule C. If it's negative, you won't get approved. If you have something there that is enough to determine a monthly payroll for you, because that number is going to be divided by 12, then you will be able to get a decent loan eligible amount. Now, the way that the PPP process works as it relates to loan forgiveness is you are going to be given an 8-week time period. That 8-week time period starts when your money is disbursed, okay? So there's a difference, not when you get approved, okay? Your 8 weeks will start when the money is actually deposited in the account that you designated for your funds to go into, okay? Now, during this 8-week process, which we're going to get into detail about what we need to do, before we dive into it, and you know you've put everything calculated on that application, I want you to start off knowing that 75% of what your loan amount is has to go towards payroll costs. And the other 25% is non-payroll costs. We're going to go into payroll and non-payroll costs here in a minute. Okay, so then when your 8 weeks period is actually up, then you're going to have to request forgiveness. It doesn't happen automatically. You're going to have to request for forgiveness from the lender, okay? And you're going to have to provide some required documentation that we're going to be going over. Then the lender actually has 60 days to respond to you as to whether or not your loan, all of your loan will be forgivable, some or none at all. And like I said before, in that process, any amount of the balance that is not forgiven will simply convert to a low interest SBA loan, and the terms will usually be up to 2 years, and that's dependent upon your lender. Okay. Now, as I said before, I just want to state again, because there has been some confusion on when your 8 weeks start. Again, your 8 weeks starts when that money is deposited into your account. Okay. Now, I talked about payroll costs and non-payroll costs. But what I want to get in before we get into those nuts and bolts is what are acceptable uses of the funds for forgiveness. So you see the 1 through 4. 1 is payroll costs. Okay. 2 through 4, non-payroll costs. So remember, 75%, 25%. So the 25% can go towards, you see here, number 2, the interest, and I underline that just to make sure we take that home. The interest on your covered business mortgage or on your covered business lease or on your covered business utilities. That's what the 25% can go towards. Okay. All right. So let's go into what specifically counts as payroll costs. All right. So we have a couple of bullet points here. Of course, salaries, wages, commissions, or the compensation that includes tips. Okay. If you normally pay for vacation, parental leave, family leave, medical leave, sick leave, that's included in payroll costs. If you typically do an allowance or separation allowance or payment, that's included in payroll costs. Any other employee benefits, retirement benefits, and the second to last bullet I want to pull out too and talk about for a little more time. And we're going to have a demonstration of this so that you can see exactly what I mean. So when it comes to your payroll costs, one of the common questions is, well, what part? Like if my payroll is a total of $5,000, do I get to deduct $5,000? The answer is you get to deduct everything except for your federal taxes, your employer's share of federal taxes. So when you see the second to last bullet on the screen here, it says that state or local taxes that are assessed on your payroll costs are able to reduce your loan forgiveness. Okay. Now for sole proprietors, it's virtually the same. As I said before, the number that you have left on your Schedule C is now what has become your payroll, your average monthly payroll. If you normally write off business utilities on your Schedule C, perfect. If you normally write off your commercial lease on your Schedule C, perfect. So it's pretty much the same, okay? So it does not include compensation of an individual over $100,000. Okay. And as I said on the previous slide, the federal taxes that's withheld specifically between February the 15th through June the 30th, okay, are not able to be reduced. Okay. You're not able to say, I want to be forgiven this part as well. That's going to be separated out. As we know, in filling out that PPP application, one of the certifications was, or it asked you if all of your employees were present here within the United States, physically U.S. citizens and working here within the United States. So if you have employees who are not physically present and their principal residence is not in the United States, whatever you're paying them is not able to be counted towards your payroll costs for the purpose of the PPP loan. Okay. And then any specific sick leave or family leave that would fall under the Families First Coronavirus Response Act are not included in your payroll costs. Again, as I mentioned, for self-employed, those of us who are doing a Schedule C, the main thing is, and all of this is going to be documentation. In the Schedule C that you used in applying, you want to make sure that what you're going to be doing in your 8 weeks is consistent within what's on your Schedule C. Again, if you normally allocate and deduct your lease, perfect. If you normally deduct your utilities, perfect. And just for some specific dates, the beginning date is going to be February the 15th, 2020. And I left that in there because naturally, you know, in the real world that we're in, perhaps you're behind on some payments. And so I've gotten the common question, well, I mean, what about the bills that were due in February? Or what about the bills that were due in January? Here is your response. This is pulled directly from the guidelines. It says payment on interest and business mortgages, real property that incurred before February 15th, to the extent that they're deductible on the Schedule C, okay? And then before February the 15th, you know, as it relates to your lease and other items, okay? So that's your date as to when it can start, okay? Now, how much can you actually convert into a grant or convert into forgivable amounts? And the big blue underlined language says all of it plus interest if you do what we're going to go over. And the main thing is going to be documentation, documentation, documentation. If you're not a person that's good with keeping track of receipts and keeping track of this, then you need to solicit some help. Because if you don't, in all seriousness, my second paragraph, you will owe money. It will be a loan for you. If you struggle with being able to maintain accurate record keeping systems in place into your business, and you are approved for that PPP, and you're not able to capture everything we're going to go over, then you can expect that it's going to be a loan. It's not going to be a grant. But the whole purpose of this webinar is to simplify it. You know, it is going to be tedious, but it's to simplify some things that you can do that will get your documentation in place and in tip-top shape, so that when you do apply for forgiveness, you stand a much better chance than not having a system in place. So some of the other things that could possibly lead to you owing money, you see here on your PPP application, the number of staff, right? So it says your loan forgiveness will be reduced if you decrease the full-time employee head count. So, you know, pay attention to the number of employees that you have provided or listed on your application. Okay. And so along those same lines, the level of payroll. So this says here that your loan forgiveness will also be reduced if you decrease salaries and wages by more than 25% for any employee that made less than $100,000. Okay. Now, we have had, and this was one of the questions that was posed during the live session, and also questions that I've gotten, you know, through various emails and calls, is, you know, particularly here in Birmingham, Alabama, as well as I'm sure across the U.S., the local governments have established their own ordinances when it comes to, you know, whether or not you're a non-essential business, and like say a barbershop, a nail salon, tattoos, like that's the most popular non-essential business that people are talking about these days. Like when you've been deemed you have to close, and you have to close, you know, that has presented some challenges, you know, for those people who have applied for PPP. And I will say that that's still, you know, we're still looking for that final, you know, SBA, you know, it's written in black and white. these are your options. Because I haven't seen it. I haven't seen it specifically address if you are a non-essential business, which means that your local government, there is an ordinance in place that says that you must remain closed. There isn't specific guidance for that. So in the absence of there not being specific guidance in that, then most people are pretty much saying, well, you'll have to pay people to stay at home. You know what I'm saying? Or get creative as to what you can have them do for your business while you're deemed closed. And so, of course, that's been frustrating, among other things, for those businesses that have been deemed non-essential, particularly those that have applied and been approved for the PPP. But I'm here to say that, because there's not any definitive guidance and things change on a day by day, don't let that rule you out of applying or believing that your PPP will be forgivable, because there are definitely enough conversations about that. And we can be hopeful that is going to be addressed by the SBA, and that's how you will handle that. And so the spirit of the law, the spirit of the program on specifically the PPP is the whole rehiring effort. If you have laid off your employees, then in essence, if you got approved for the PPP, then you have until June 30th. And June 30th is just when the program is, or when you can apply. Again, this is at the time of April the 28th. That could very well change. And that is to restore your full-time employment at the salaries that you indicated on your PPP application. Okay. Again, these dates can certainly change, but I wanted to go over the main caveats, because we're going to talk about the payroll costs, but the general things that are going to, be looked at is how you adhere to how you originally applied, number of staff, level of how you're paying them, and rehiring. And, I know that it sounds like a lot, right? And so you get that $1 million question. It's like, oh, wait, so this could be a forgivable, grant, a forgivable loan or a grant. It must be too good to be true. The short answer is, well, no, it's not too good to be true, because it actually can be. But as you can see, we're halfway through the presentation and I've gone over so much because it is tedious, but it's well worth it, right? Because even if your loan eligibility is $5,000, okay, that is $5,000 a small business owner could use to take care of costs outside of the household. So any amounts, it should be forgivable, and you should work towards getting that for your business. One less thing you got to worry about. So again, at the end of the 8-week period, I just want to stress this again. At the end of your 8-week period, you do have to request that loan forgiveness. And of course, just like you certified with the PPP application that everything was true, you're not lying, and that you'll go to jail if you are, you'll have to do the same thing for the loan forgiveness. It's to certify that, this is true to the best of my ability, and I would like to request forgiveness. Okay. So now let's get into the moment you've been waiting for. Okay, Taliba, enough talking. Tell me how I can make sure this is a grant. Okay, we're ready. So the first area that I want to dump into is where you're keeping those PPP funds. Okay. And I start here, and this is definitely my suggestion. This is coming from the bookkeeping, accounting, financial management world, and I just want to share all of this and I just want to share it with you because I believe that's how you're best going to be prepared. So I want you to think of restricted funds. Restricted funds. That's your keywords. The PPP money is considered restricted funds. Those of you who are in the nonprofit world, you know immediately what restricted funds are. If a donor gives you money and says, I want you to, this money to go towards this cause, then that's what that cause has to go towards. So PPP is restricted money. Okay. And so now when you get that special classification of restricted money, you have got to go out of your way to make sure that that money is spent in accordance to how the person that gave it to you expects you to do it. So where are your PPPs going? My recommendation is that you actually put it in a separate account from your operating account. Okay. And what this means is, and it's easier for those folks who have applied with banks that are not their general banker. Of course, we have not going to spend up a lot of time, but those who have been with the big box banks, Bank of America, Wells Fargo, JP Morgan and Chase, that were not approved, they sought out local banks and federal credit unions and CDFIs that were participating. Go you. Yeah, that's what you need to do. And so as a requirement of doing that, most of those banks required you to have a business account with them. And that's perfect because now you've already separated your PPP funds from your operating account. In the event that you were approved with your existing bank, which is good, what I would recommend is that you ask for, you create a whole different account. Or if you have more than one account, and one is your main operating account, just separate it from your operating account because you don't want to commingle restricted funds. You want to make it so easy for you to be able to track everything that you're doing with the restricted funds. Okay, so I've harped on that. Now, the other, and this is exactly what I said on the other side. The other piece to that, again, particularly in not commingling, is over the 8-week period, when you run your bank statements, like say if some of your supporting documentation has to be bank statements from your lender, it'll just be easier for your bank statement to be all transactions from PPP, which happens when they're in their own account. Okay, so that's just another reason why. All right, so for almost getting to the end, I figure the best way for us to put all those words I just said into play is to have a sample company. So our sample company for tonight is going to be ABC Consulting and Mr. John Doe. I'm so original, I know. All right, so they're going to be our sample company. All right, so ABC Consulting was awarded PPP funds. They applied, they were approved, and so now they're ready to roll. All right, so they actually opened up a checking account, as I said, specifically for the PPP funds, and this screenshot just simply shows that they actually did what I recommended. And so they created a PPP funds account. The other piece that I want to pull from this slide is, again, to direct you to your lender. So you want to make sure, and your lender will tell you, but just in case, you want to make sure from the lender that has approved you, if this is a requirement, okay? All right, so ABC Consulting, their PPP amount was $25,002, okay? If you are applying for the PPP or thinking of applying for the PPP, my recommendation to you is that you actually use a PPP loan calculator. Okay, that's how we got that odd $25,002. If you don't have a PPP calculator, let me know. Get in touch with me, okay? All right, so now that we've ABC Consulting, we know they have $25,002. We're back open, you know what I mean? Wherever state you're in, you know that your business is on the gate to get ready to open. So what I recommend you do after you've done that separate account is to now have a ledger. Now, I am a certified QuickBooks Pro advisor. I also am a QuickBooks reseller. So, of course, I'm going to encourage you to do what? Make sure you have accounting software, specifically QuickBooks. And, of course, I can help you with that. However, that's not the purpose of this webinar. The purpose of this webinar is to make sure that you understand that no matter what you have in place, whether you're going to use QuickBooks or Wave or whichever accounting system that you have in place. You can also accomplish that through a basic ledger that I'm going to show you how to do using Google Sheets. Okay, because the biggest piece that we want to do is I want to make it as simple as possible for you. We're not going to create any challenges to make sure that this is actually a grant. So we're creating a ledger in Google Sheets. That's the screenshot you see here. If you're familiar with Google Sheets, it doesn't have to be in Google Sheets. I do not work for Google. I just use Google Sheets, okay? It can be regular Excel or whatever you use, all right? And so, but for this case, ABC Consulting has created a ledger and entitled it PPP Ledger. And we're going to be tracking funding and expenses. So as you can see here, what they did was first line to put the date that they actually were received their $25,002, and they put that under the credit column because that is income coming in. Okay, if you need a ledger, you can get in touch with me. Now that we have our ledger, whichever system we choose, one of the first things that we're going to do, really even before you put the amount that your loan is into the credit column, you want to also make sure that your ledger has your 8-week period. Okay, so this is going to assist you if it's always in front of you, if you always see it in black and white. It's going to become a habit and you're going to see it. You're going to know. You're not going to be surprised when that 8 weeks is up. So I just use Planet Calc. Of course, you do not have to do this. This is just my screenshot to capture what I did. But you want to make sure that on your spreadsheet, you have when your 8 weeks start and when your 8 weeks ends. Okay. So ABC Consulting for their 8-week period has put, well, I got my funds last Monday, April the 20th, and my 8 weeks ends on June the 15th. All right, so that way it's a constant reminder. All right, so now what I recommend after you get your ledger together, I want you to also create a place. As you see here, you can do a Google folder, Dropbox, whatever cloud software you use that will allow you to effectively store your receipts and your invoices in one place. Okay, that's the next thing that you're going to do after doing the ledger. Okay, because we want to make sure that all of our stuff is in one place. So in this particular instance, ABC used Google G Suites. We used our Google Drive folder, and we created a PPP 7A loan records. Okay, just that simple. All right, so what are some of the things that we're going to have to do now that we're back open, we're ready to roll, we're rocking and rolling? Now we're going to follow ABC Consulting a little bit during their 8 weeks, okay? And we're going to track how they are ensuring that their loan is going to be a grant. All right, so got to run payroll. Remember, we talked about payroll, 75%, other things, 25%. So ABC Consulting has to run payroll. And this is a sample payroll register for ABC Consulting. All right. And so for this particular payroll, we see that the total payroll is going to come to $8,970.83. Okay. That's what we have determined is the total payroll. Now, that is the gross pay. So the gross pay includes what? All right, so let's dive a little bit deeper. Let's make that screen a little bit more concise. And we're going to pull out the breakdown. All right, so although on the previous screen, we said that our gross pay, our payroll costs came to $8,970.83. Remember what we talked about before. There is an employer side contribution to federal taxes that we cannot include in payroll costs. So in this particular instance, we're going to use that number right here in the middle, $637.50. That's the amount that we cannot say goes towards payroll costs. So what are we going to do? Instead of Okay, and this is operating under the fact that you have the two separate accounts. Okay, so instead of transferring $8,970.83 from our PPP account and transferring it to the operations account, or the account that you normally run payroll out of, what are we actually going to transfer? We're actually going to transfer $8,333.33. That's the amount that you're going to transfer from your PPP account to your operations account so that you can pay payroll. Okay? Now that we've done that and we've taken care of payroll, remember that ledger. Okay? We want to make sure that we have tracked it on the ledger. So we ran payroll today, ironically, 4/28 April payroll. Now we're going to debit, because this is an expense, we're going to debit our $25 into 83333. I love those threes. You see it on the screen. $8,333.33. Okay. And of course, you want to make sure your formulas are in there so that you can see, all right, now I got $16,669.17 left. So what do you think is going to be the next step we do? Remember, we created a folder. All right. So not only am I going to document it on the ledger, I'm also going to take that payroll register, make it a PDF, and I'm going to plop it into my Google Drive folder. Okay. So I'm thorough. I've ran payroll, I've tracked it on the ledger, and I've provided documentation for that. All right. So again, so this is for every PPP related expense that we've talked about so far. That's what I want you to do. I want you to put it on your ledger, and then I want you to make a PDF, take a picture, whatever, of what that expense is, and plop it into your folder. Okay, make sure you update that ledger. All right, so let's talk about the 25%. So naturally, ABC Consulting does have other bills, okay? The type of PPP loan that they selected was payroll and other expenses, right? So they have office rent, they have an electricity bill, they have health insurance, all right? These are all coming up. They're due next week, right? So we want to pay them. Now, a couple of things that I want to point out with this screenshot here that I took off the address and then realized, I took off the address to protect the client, but then I realized I wanted to make this point. So because someone asked, now the question is, well, does the bill have to be in my business name? Okay, my answer is yes. The bill definitely needs to have your business's name on it to show that it is a business expense. Okay. For my self-employed people, again, you want to make sure that it has your business in there. Now, if you have a home office and you indicated that in your documentation and your communications to your lenders, that's different. And I would even, tell you that not all of your utility bills from your home office is going to be eligible. It's the same way as how you filed your taxes. So if you did that home office expense, you know that there's a formula in place, and we won't dive into that specifically, but I did want to touch on that to let you know that if you have a home office, my recommendation is that you use that same formula to allocate it. So if your home office is 20% of your home, then 20% of your home's bills is what would be a business expense. Does that make sense? Okay. So let's look at what we have for ABC Consulting. All right, we got a lease here that's in the amount of $2,476. We got a utility bill, and we have some health insurance that we are paying for. All right, let's get to paying it. So as you can see, we are paying it. We've cut the checks, however you do it online, but we have documented our ledger. So you see here that you put in the line item, paid office rent. This is the amount. Paid electricity. This is the amount. Paid all these things. This is the amount. And you make PDFs of everything you're paying, just like I said before, and you plop it into your folder. Now, what I do want to pull on before I go into this, and I think I have it actually in another slide, is if you've been paying attention to what I'm saying, you know that you probably are burning with anxiety that you don't know what 25% is. So that's why before you start your ledger, you might even want to add a line, to your ledger that where you've already calculated this is 75% and this is 25%. And that way, if you have it on your ledger, you already know, okay, for 75%, this is what I have remaining. For 25%, this is what I have remaining. So you could create another column in your ledger if you want to make sure that you've properly allocated for that 75 and 25. So you're able to appropriately forecast, right, over the next couple of weeks. Because let's face it, that's what you're doing. You're forecasting and budgeting by using your pot of money. Okay, so because John with ABC Consulting did determine what his percentages is, he knows what 75% is and what 25% is of what can go where. He notices that, oh, hey, I got $785.39 left out of my money. Where should I apply it? Okay, so he knows he still has some room in that 25%. So he pays the $785. Okay. Or also he didn't pay the whole, amounts for, as you can see. So April, he was able to pay the whole amount. All right. But then June comes around or May comes around and he's like, hey, I can't pay you the $2,400, but I can pay $785. All right. So you are going to be able to forecast and appropriately budget to make sure that you're effectively using your PPP funds. So that's the other benefit is it's not just for record keeping, but it actually is empowering you to be a more efficient business owner. And this is the slide too that I just mentioned. So you want to make sure, again, that you've done your percentages. This is what 75% is. This is what 25% is. As I said before, you can create a completely different column within your ledger to denote this. Or in this case, ABC Consultant just highlighted the rows so that they can see what's 75% and what's 25%. Okay. All right. So again, just as I said, all of this is for the purpose of the loan forgiveness, but you'll also be able to get the benefit of, again, budgeting and forecasting. And the more that you become a creature of habit over your 8 weeks and make sure that you document everything that you're doing as I have recommended here, then you're maximizing that percentage. You're at 100. The more that you can document and show that you have effectively used the money how you certified that you would use it when you got approved, then it will be a grant. Of course, it is up to your lender, but these recommendations are pretty solid. Okay. And again, just as a reminder, after you request, it's not automatic. After you request that PPP forgiveness, your lender has 60 days to respond to tell you yay or nay. Okay. All right. So again, we have everything in our Dropbox folder. Google Drive, as you can see, I'm saying everybody. So just so you know, I'm not showing any favoritism, but we've put all our records together. And so what I recommend is, on that 9th week, right, the 9th or the 10th week, you want to go ahead and get your request in. Okay. You want to provide that documentation, send it over however your bank has set it up. To show them that, hey, this is the documentation. This is how I spent the money. You can also throw the bank statements in there, like I mentioned before, especially if you have created a separate account for your PPP, then bank statements are also their own, documentation showing what you've done. So bank statements will be pretty powerful as well. All right. So that's it, y'all. I hope that you found this information helpful. If anything that I mentioned, you need me to drill more into for you, this is how you get in touch with me. I'm on Facebook, I'm on Instagram, LinkedIn, And of course, my website is trusttmbtaxes.com, which is where you're likely viewing this video. And so please do get in touch with me if you need any assistance or have any other questions. I love the feedback. So thank you so much for joining me, and we'll see you next time.